Hi, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by Scott Redler, who is a professional trader with T3 Trading Group and also the moderator of the Alpha Team virtual trading floor with T3 Live and the Chief Strategic Officer. That one's always hard for me to say, Scott, with T3 Live as well. Thanks for joining me, Scott.
Thanks for having me. It's great to be here, and I'm looking forward to giving some color on what's happening in these markets because it's as crazy as it's been. It's pretty relaxed.
Yeah, for sure. All right. So my first question, as you know, you've been on this program before. For everyone who is here with us for the first time, thanks so much for coming. This is a Q&A event between myself and then also you and Scott. So this first half here, I'll be having a conversation with Scott about the current news happening in the market. And then the second half, we'll get to audience questions. So if you can, I'm going to, in the live chat, just put something so you can see, submit your questions there, and I'll get to all of them by the end of this. So submit them now so we have them piled up when we get to that point. All right, Scott, so my first question for every trader who comes on this event is how would you grade your week of trading so far on your kind of typical grading scale, A to F?
I have to say, I'm going to broaden it out from a week. I'd say the last 4 weeks,
Okay.
I give myself an A minus, and I haven't given myself an A minus in a while. It's been, well, I guess, it's been a tough year and a half of trading. It's been very range bound. There's been a lot of misdirection. There hasn't been a lot of follow through, but in the last month or two, the market's loosened up. And I feel like I've done a pretty good job finding where the action is, staying with it as long as I can, using my tier system to maximize some gains. I always sell things a little early or this or that, but I feel like I did a better job staying with it, riding this active sequence, not being overhedged. And today, pretty much, knock on wood, I closed at the highs of my month, quarter, and historic highs after being down probably six figures off my high water mark not even 6 weeks ago.
That's great. Great to hear. So good trading happening for Scott in the last weekish. So that's good. All right. So I want to just get right into the big 4 weeks of the last month. Right. I just want to get into the big news of the day. Obviously, it's Fed Day, and that's what we're going to be kind of focused on here with our conversation. As expected, the FOMC did skip a rate hike today. So we've moved away from pause into the language of skip. They say they like that language better. Today's statement, though, came with updated economic projections, and that was where the focus really was for the market and for economists who were looking at this decision. And those were pretty hawkish, if we want to use the correct term here. So the dot plot now shows two more rate hikes happening in 2023 with a terminal rate of 5.6%. So that's two more quarter point rate hikes expected this year. What are your thoughts on today's decision and that statement?
I thought it was smart. I thought he threaded the needle really well. The S&P is 20% off the lows. The Nasdaq, I don't even know, maybe 26 or more percent. We are seeing slowing. We are seeing some disinflation. We saw that in the CPI and PPI, but we have a pretty hot stock market. A great jobs market also. So kind of like the market's normalizing. I don't think he wants things to get too hot. So basically, he left the window open that he could raise it another quarter twice. And some people are like, well, Red Dog, what do you think? When will he do it? Why would he do it? I'm like, well, the S&P cash, let me just see exactly where we closed. The S&P cash, I think, closed, hold on one second. Give me 1 second. I am a trader. I have all these things in front of me. The S&P cash closed around 43.72, okay, which is up a lot in the last 3 to 6 months. So I think if we hang in here and this trend in the overall stock market continues and we go towards 44.50 or 4,500, he's going to then raise a quarter in order to slow things down because he doesn't want people feeling that great, paying for everything with the wealth effect. So this way, all of a sudden inflation isn't getting tamed. But if, all of a sudden we do correct a bit and we head back down from 43.72 back to 4,200, and pull in off the highs and we see a corrective phase, I have a feeling he's just going to stay the course because things aren't getting too hot. And then perhaps we still see some inflation data go in the direction which he wants, which is to the downside. So I think he left that window open just in case all of a sudden, this inflation doesn't continue and stock market continues on this upward trend in sequence. so he could slow it down because he doesn't want the stickiness that we've seen so far with the overall economic numbers.
These Fed days are interesting for traders, and maybe especially for people who don't have a lot of experience with this kind of data. The decision comes out, that midday time, 2 p.m. Eastern, really closer to the close than midday. So you have a lot of trading happening ahead of the decision, and then like your busiest, most volatile time happening in those last 2 hours of the session after the meeting and after the Fed chair's press conference. So walk me through how you approach today's meeting ahead of time during the session when we were waiting for the decision to come out, and then how you adjusted and traded following the reaction.
All right. Well, I was pretty long. I've been long for the past few weeks, and then up until yesterday, I took off some positions because the market was at a weekly and monthly high, so we had to move into the Fed. So I didn't have FOMO of missing out of certain things actually going higher. So I had the luxury of selling a lot of things into this strength over the past week or so. I actually was hoping we'd go a little higher because I wanted to be a little bit more short. So what I did as of yesterday, I started selling some premium in the SPYs higher to get me short the SPYs just in case we pulled in and I had less positions on it. We did rally in the morning, so I was able to sell a few things to get lighter and book some money. And then I was able to sell some premium above. And then when I had two plans in my head. One, if they raised rates and it was a surprise, I had support levels well below that maybe I would look at. And if they did what the street expected, which is what pretty much he did, where I would want to sell some premium for later this week or next week. So what happened was a very muted response. This was probably one of the most muted trading days I've seen in Fed in a while. So I didn't overtrade it. That was another thing. You could overtrade it. Last Fed date, I think I gave myself a C- because I overtraded the SPYs in a stupid 3-point range and lost, too much money. This time I was like, hands back. I'm like, I sold some premium. I've already netted some money. Let me, knick-knack a little bit. And P.S., today will end up being a good day. And I typically don't make much money on a Fed day, and I did pretty well.
Yeah, great. All right, so you touched on this a little bit already, but the most recent data on inflation, the CPI yesterday and then the PPI today, show a marked slowdown happening in price increases at this point. The annual CPI rate was the lowest we've seen since March of 2021. The annual PPI rate being the headline, not core, being the lowest that we've seen since December of 2020. Sorry, as that data continues to come in light, could you see the Fed shifting back to their kind of original plan of just one more rate hike this year, if we continue to see this good inflation data?
Yeah. Like I said, kind of with the market before, if all of a sudden, 43.72 is a high around the high, the June high, and then we start to retrace lower, and the market corrects 3 to 5%, and the data continues to show the direction of a decrease in inflation or disinflation, I don't think the Fed does anything in July. The Fed's just saving it in case data is hot and the market stays too hot. So if we still continue to show signals that we're slowing, and if we start slowing too fast, then Jeffrey Dunlop, who was on TV today, will probably be right, because he thinks, we haven't even felt the ramifications of the 500 basis points we've already been raised, and then we're going to fall off a cliff. And if that's the case, we might be done for the year. So I think, we're going to go data by data and be prepared like we always are, and hopefully be able to net money along the way without too many opinions, but with multiple plans. Because I think the Fed has multiple plans right now.
The difference between what the Fed has been saying and what traders have been pricing in has been pretty far spread apart throughout this entire hiking cycle this year. Traders have continuously been betting on rate cuts rather, happening by year end. That was 3, then it was 2. Now I think it's down to maybe just 1. Do you think the market will ditch those expectations completely based on today's statement?
Oh, it's funny because, I don't know, 3-6 months ago, everyone was saying, the Fed's going to cut rates, 2-3 times in the second half. I'm like, they're not going to cut rates unless more banks break and the S&P falls 10% from here. So what happened? The S&P rallied, and now people
we're
say,
in a bull market now, technically.
Right. So we're going to raise rates. So I think that it's just really rhetoric from TV. It means nothing. Okay, the price action is what's key, and that's what we watch. And a little common sense helps. So with what we're seeing now, we've seen a really nice rally. we shouldn't have animal spirits because we're not in a market environment for animal spirits. We've already seen 2 years of consolidation of a 10, 12-year bull run, which is normal. We can't give out free money forever like we've done with mortgage rates below 3% and interest rates where they were. So we're raising them slowly so everything goes back to normal, where you can actually make a little bit of money in the bank. There's no overbidding for houses, and maybe some younger people could afford it because they're coming down, and stock market's consolidating in a way where if you put money every month, you can get a good cost average, and then in whether it's a year to 4 years from now, we go back to an all-time high. We get that 7%, average annual return, which is what we've had over the last 100 years.
Mm-hmm. So the Fed's economic projections today also showed that the bank no longer expects a recession in 2023. Previously, the March economic projections showed a slight recession by the end of this year. Now the Fed says no recession. Do you agree?
I don't really care. I think that, again, okay. This is rhetoric and this is, headlines. All I know is, you still have restaurants are packed. It costs a lot of money to go to Florida and I can't get a flight. I was in the Dominican Republic for vacation and I couldn't even have a friend visit the hotel because it was too packed and the fire marshal would have closed down, the Hard Rock of, so people are still out there spending money and the job market is super strong. So to me, that's not a recession. In 2008, there were 8 million people looking for jobs. Now there's still, if you look at the JOLTS, 8 to 10 million jobs open. So at this point, I don't see it coming. If the stock market fell 10% or 15 or 20%, and you saw the layoffs, then I would say, hey, things feel like they're getting worse. But right now, I think things are just normalizing still.
All right. Kind of my last question here before we go to audience questions. So we have quite a few lined up, which is great. We're still set to get some important economic data tomorrow morning, and it's a really busy morning all before the open. May retail sales, weekly jobless claims, Empire State Manufacturing Index, Philly Fed Manufacturing Index, all coming out at 8:30 a.m. Eastern tomorrow morning. So walk me through your strategy ahead of the open and at the open on a busy day like that.
Well, I only have on what I'm committed to and what I can handle. I typically don't try and have too much on with binary events, but tomorrow's not a binary event. It's just data that we see every single week almost. So there are a few things that people are looking at. Retail sales could be a barometer of the consumer. The consumer's been really strong. So the fact of the matter is they want to see if the consumer is still strong or is he starting to falter. So then everyone can start talking about recession or not. Then the claims is they're trying to figure out that some of the layoffs in tech over the past 3 to 6 months, they haven't really affected the claims that much. Is it affecting the claims? So at this point, I think, I'm just trying to trade the patterns that are working until they don't work. And if all of a sudden something changes because of a piece of data or the trade changes, I'll get out. But after the day after Fed day is always a little bit tricky. Sometimes they reverse it. Sometimes it's a trend day. So there's some things I want to try and stay with if we are status quo. And if we're not, I don't have too much on it. If I lose money because of a side swipe or something I'm not expecting, I'm fine with it. Plus I have some hedges on, so I'm pretty balanced that, if we're up, I could make some money. If we're down, I could figure it out.
All right, so let's go to our audience questions. Our first two questions kind of go hand in hand with each other from Bruce and Jignesh. They both asked, Bruce asked, what's the narrative that could stop this rally? And Jignesh asked, what could next drive the market down? As we mentioned before, we're technically in a bull market for the S&P 500, up 20% off the most recent low, more than 20% off the most recent low. So what do you think could be the next thing to drive stocks down?
Well, you want to listen to Mike Wilson, who's been saying we're going to be in a recession, a bear market for 9 months, or do you want to listen to the market itself? Right now, every week I figure out where the 8 days of the S&P and of the Qs, and until we break and close below the 8 day, market's not showing me any weaker signals as far as what could put us in a bear market or in a worse market. I guess if all of a sudden we do get a slowdown and people and we might get a reset. I think what I'm reading about, there's going to be a reset in 2024 commercial real estate. So all those cheap loans that everyone had when they were giving out all the free money, that might reset into a much higher rate that might not be able to be handled. So then all of a sudden you have defaults happening. That's really not going to be the same case for residential, probably a few more years. So maybe maybe another few regional banks that that did the wrong thing, like a Silicon Bank that what they do? They borrowed short and lent long, meaning they didn't think that rates would go like this. So there are a few things that could happen, but you always want to keep your eyes open and know how we react to some of these headlines. But at this point, everyone's asking the same question: what could derail this? So typically that means people are caught short or they're underinvested. So that means every dip, seems to be bought until it's not, and then there'll be a time when it's not, and then a time when we're like, okay, we're more tactical. The market's not paying for us to be long or rotate among sectors, and then we'll figure that out. But for right now, the SPY is closed at 437. The 8 days 431, 6 points below. The Q's closed at 366. I think the 8 days down at 358. So we can't even get back to the 8 day. So that's a strong market. You could even be in a strong market when you're above the 8 and 21 day. So at this point, I think people should be looking for setups instead of tops and recessions. That'll make them more money.
Great. Our next question comes from Ryan, and he asked, what is your favorite way to play AI? Chips, software, services, or something else?
It all depends on what's happening in the market. AI itself, that stock's been unbelievable. We caught 3 really nice active sequence there, and even after earnings, when it sold down, it regrouped and continued. Some people are playing AI with NVIDIA. NVIDIA is obviously, post earnings, gave you a post earnings gap. It just made an all-time high today. NVIDIA was making new highs while everybody was saying the market's going to, trade down in the last hour. So it gave me clues not to be short. Some people are playing AI through AMD. Some are playing it through 2 months ago, I was playing it through Google, so it all depends on what the focus is, what the chart pattern's doing. But I do think AI overall is very exciting, and it's going to be here for a long time. And, and you have to kind of roll with it. Don't be scared of AI. AI is not going to end the world. It's going to enhance it in ways. And if you embrace it, there'll be ways to profit from it.
Our next question comes from Baveen. I apologize if I pronounced that wrong. He asked, Scott, NVIDIA, Microsoft, Apple, all at their all-time highs today. Do you see a short-term blow-off in them and maybe the NASDAQ, and maybe small caps taking the baton for the next few weeks/months?
It could. I've tried to play the small caps, and I was long the IWM and options on them for most of the last week and a half. And today I got out of it. I sold some strength, and I also, got stopped out of some. A lot of people are thinking that the tech can't go up anymore, and obviously we just saw NVIDIA go make a new all-time high. So if there's a lot of underinvestment and people still betting short, I think the stat in the S&P was that hedge funds are more short to SPYs than they have been since 2007. So if we don't go in, chances are they have to cover, and it creates a little bit more of a chase, a little bit more FOMO. And then as soon as we get really exhausted, then we'll see it. It hasn't happened yet. Every time it seems like we're a little exhausted, going to pull in, we hold where we have to. And as far as the small caps, there was a nice move there, but it's going to take a day or two to prove that, I can go back in there and make some money in a methodical way, the way I like to.
Jeffrey asked, Apple looks great, but the market looks tired. Is it possible that Apple rises in this environment?
How does the market look tired? Like what's, you have a lullaby in the background? To me, it looks like it's, just trending. It'll look tired when we break below the 8 day and break below the 21 day. Apple just had a downgrade literally 2 days ago, and it couldn't go lower. So that tells me that still buyers could probably go higher. It's the only one besides NVIDIA at all-time highs, and it's very highly weighted in the SPYs and the Qs. So if they want this market to continue, the all-time high from a week ago or 2 weeks ago at the event was 184 something or other, 185. So if Apple gets above 185 and goes to 190, which it could, chances are the SPYs and the Qs are going to continue. So, I continue to watch Apple this week. I'm like, you can't get too bearish if it holds 182. Well, it held 182 and now it's at 184. And if it gets it and stays above 185, it could, it's pouring outside. It could impulse another move to the upside, perhaps.
John asked if you see rotation still in the market.
Yeah, we did just see 2 weeks of it. We started June thinking that maybe the Qs would underperform, and that maybe you can get a good trade in the diamonds and in the Russell and in the bios and in some industrials, and they kind of had a decent move, but still the Qs had a better move. So sometimes you don't want to try to outsmart yourself, but in order for the market to continue, if the Qs do decide to rest, then the other sectors have to continue to take the baton. And as of right now, that's what's been happening until it doesn't.
Charles asked, what stocks look special now? And for those who may not know Scott talks about special stocks and what makes them special. So to you, Scott, what are the special stocks you're seeing right now?
There's probably more special stocks now than I'm not in, that I'm looking at, just because, again, I wasn't sure what would happen today. I didn't want to be in 15, 20 names if all of a sudden the SPYs were going to be down 7 points, which, after a great 4 or 5 weeks, I didn't want to do. Any stock that's above the 8-day, that's making a sequence type of trend, is kind of special. A lot of semis are special. AMD held the 8-day, looks special. NVIDIA is special. Apple's been special. Tesla's been acting very special, making it like you could buy a dip. So special is like your longest stock that closes well. Usually if the market's up, you can sell it the next day, make some money. It comes in, you could buy it, and it makes higher highs. It's also special if it closes well, market's open down, and you could add to it in the hole. Then it goes green, gets a push. You could sell what you added and then hold your position and make money around your position. So as long as the stock's making it easy to hold, I consider that special. If you take a strong stock home because you think it's acting well, then you get a gap down and it doesn't let you out, and then you try and buy more, and then it does what you don't think it's going to do, and you lose a lot of money. Then all of a sudden, you don't need to sit in it because it's hard, not special.
You mentioned Tesla, and I want to ask you about Tesla. Today was the stock's first down day in, what was it, 13? They had a 13 session win streak, longest ever. They broke their record of 11 previously. What does the stock look like to you? What does the stock look like to you right now? I can see you're playing it, you're long it, but you're also short it for some options. So
yes,
what are you seeing in Tesla?
So I'm seeing a stock that's been very, very special since about 3 weeks ago, when it triggered above, I think, like 170, 180. Last week it got a little extended, so I felt more comfortable being long the stock and selling options higher. So that was a way for me to sit in the stock, that if it goes lower, I can get paid with the options, but if it goes higher, I have room to the options. And that's been working well. Or even today, I made money on both sides, from where it was to where I sold the strikes. And as of right now, it acted really well. So if you want to simplify it, today's low is 250.50. That is today's low. If someone's very active and they want to be in it versus a level to say, does it stay special? To me, Tesla stays special if it could hold 250.50. If it breaks that, then it's changing, because it hasn't done something like that in a while, and that means it's choppier. So now let it build here, and if it could stay here and then all of a sudden take out today's high of 261.57, chances are there's more room there. So staying special to me would be holding today's low, consolidating, letting the 8-day catch up, and then continuing. And do I think it could consolidate? That's why I'm staying in the stock and I'm selling premium above it. If I thought it was going to move really fast and really far, then all of a sudden I can be in trouble if it gets above the premium sold. So at this point, I think it could move up, but at a less of a rate than it's moved up in the past 3 weeks.
Bruce asked, he said, so the 8-day is the heads up line. So you've mentioned kind of the 8-day average being kind of where you measure a lot of stocks, them being above and below it. That's kind of your line where you kind of pay attention to a stock?
Yeah, that's like my momentum line. I'm a momentum trader. I'm an active trader. I can get in, I can get out. There are some people who don't trade as active as me, that might use the 21-day. They might say, hey, I use the 8-day, and sometimes I get out at the 8-day, and then it takes the 8-day back, and then it goes. They'd rather be less active and use the 21-day. But the 21-day is still considered like a momentum moving average. And then you have some people who might trade not that frequently and say, hey, I'm going to give it to the 50-day, because they still think the 50-day means a strong market. It's a little slower. And then you have the institutions that use the 200-day. If you're below the 200-day, typically you're in a bear market, you should have a lot risk down. But when you're above the 8-day, that means dips are shallow, there's momentum, and they're paying active traders like me to have risk on, and it moves fast enough that, I can stay with it.
You describe yourself as an active trader, and of course you are. Do you rely more on day trading or swing trading in your process?
Well, I've been doing this for, you can see I'm 50 now. Do I look good for 50?
Yeah, you look great, Scott. You look great.
Oh, there you go, guys. Compliments will get you everywhere. No. Anyway, when I started in 1997, I was an active trader. I couldn't take overnight risk, and I didn't have the bandwidth or the wherewithal. And now that it's 20 years later, I've learned enough where I have a lot of different types of accounts to maximize the moves of the market, because I put time in too. I'm up at 4:30. I'm prepared. I think about all different situations. I'm a different person than I was when I was 26 at 50. I've also learned a lot. So I try and put myself as like a small PM, like a portfolio manager. There are portfolio managers that manage 100 million, 2 billion, 10 billion, and they always have to be doing things to make money. For me, obviously, it's not those parameters. So I have a certain amount of money that I have to work with, and I split it up into active trading, swing trading, a box that maximizes my losses and also maximizes my wins, but also makes me lose more. It adds my size. And then I have an options account. So I figured out ways to make money all different ways when the market's letting you do it. And then I also have outside T3 or 401k. I have a 403b. I have a 529. Those are longer term ways to make money for the future, so you can retire and send your kids to college. But right here, I get paid quarterly, not monthly, because I try and be a little bit bigger picture. Some traders get paid monthly, so you have to be a little bit more perfect. I don't want to have to get in or get out of something based on a date in the month, etc. So at this point, I've been doing it for long enough that I feel like I could do a little bit of everything. When in a crappy market where it's going lower and I don't want to be in risk and I sit in a lot of cash, I just try and make a little bit of money tactically. In a trending market like we've had for 4 or 5 weeks, I try and sit in things for days, weeks, or months, and then trade around them using a tier system, and then using options when I think there's something that could happen, but I want to define my risk instead of being in harm's way.
As of, I don't remember exactly what day it was last week, but as of last week, as I mentioned earlier, the S&P 500 is technically in a bull market now, out of the bear market, up 20% from that most recent low. Has your trading changed at all in the past few weeks as we've seen the market break out of that trend that it was stuck in for like 2 months before this?
I don't think the bull market or the 20% off the lows has anything to do with my trading. There are candlesticks that changed my perception of the market well before. So if anyone who's watching this wants to write down these dates, I'll tell you the dates that I thought changed the market. On March 29th, the SPYs broke above an inside wedge and took back all the moving averages. March 29th to me had me put more risk on. Then you had to move higher, and then again, if you want to write down May 17th, look at that day. You had an igniting candle that broke out of a different pattern. And then you had another candle that reignited or re-energized this bull trend on June 1st. So there were 3 different days within the past multiple months that gave me confidence that this active sequence to the upside can continue, not the fact that we're 20% off lows. I think those definitions mean absolutely nothing. They're just good talking points for the press and the networks, and I think they're even stopping doing that as much.
What are your favorite indicators as an active trader? What do you rely on every single day?
Really chart patterns and relative strength. I had this guy who's been trading also as much as me, 25 years, and he's actually made a lot more money than I've made, and he works at Schoenfeld, and he's just like, I ask him what he likes. It's like either stock or they're good. I'm like, well, what does that mean? He's like, well, if I'm in a stock and the market goes low and it doesn't go down, it's good. I'll add to it. If I'm in a stock and the market goes up and it doesn't go up, it sucks. I'm out of it. So that's his term for relative strength or relative weakness. So I like to use relative strength and relative weakness with lots of different chart patterns and and other kind of things.
Talk me through your process of picking a stock on a daily basis. When you're choosing a stock to kind of put on your watch list that you might get into, what do you go through?
Well, again, I've been doing it for a long time, so I have an arsenal of stocks I've been watching.
Right.
I watch 40 to 60 stocks that are on my go-to list, but there's also hundreds of other stocks that are campaigning to be on my go-to list. What does that mean? That means they're active. That means they're moving fast. That means they trade with chart patterns. That means they act special. That means they're maybe new and up and coming, or quality and blue chips. So, but most of the time, these stocks are above the 8-day. They have a tight pattern, and I'm looking for them to resolve a range to the upside where I could add shares with my day count rules and get in on day one, day two, maybe add day three, sell some, and then try and swing it for bigger time frames.
The number of stocks that are available to trade is obviously overwhelming. We even just looking at the S&P 500, you have technically 503 stocks there that you could trade. 30 in the Dow and thousands and thousands and thousands in the Nasdaq. For a trader who might feel overwhelmed by all of the options that are out there, how do you find the right stocks to play?
Well, it all depends on how long you've been doing it. Like, again, you've been hearing in the media how there are 500 stocks in the S&P, but 6 of them are responsible for like 90% of the gains. Mm-hmm. Well, the beauty of that is, as an active trader, you could just play those 6. That means those 6 are moving, those 6 are trading well, those 6 have liquidity, those 6 are paying you to be long. If you like to be long, you don't need to look at the other, 494 or whatever it is. Then what you want to do is you want to find ones that also are playing catch up to those 6, and you could find those by stocks trading, over their average volume in the first half an hour, a few 100%, or groups that pop up like in AI. I never traded AI, this stock,
right.
A year ago. I've been trading it now for 3 months. It came on the go-to list and it stayed there. Even this software, it wasn't on the go-to list, but then I have stocks that have been on the go-to list for 10 years or more, like an Apple or this and that. But 2 years ago, there was no touch. Tech stocks were in bear markets. So stocks come in and out of your go-to list. So as an active trader, you create your parameters, and then you stay with them as long as that stock stays special.
Mm-hmm. Ryan asked, what are your favorite times of the market day to trade most actively?
That's a good question. I make probably 90% of my money between the morning up until about 11:30. So I think the first hour of the day is awesome because you get some emotional moves from the market space and the futures, but you can take advantage of those emotional moves by knowing what the stock's been doing, and then you get to look at the way the market acts in the first half an hour using relative strength and relative weakness. You can take advantage of dislocations. So to me, I make primarily a lot of my money using daily charts and doing all those things in the first hour. So by 11:15, 11:30, I'm usually done. I have my positions that I have. I put my stops in, and I go home, take a Peloton class, go in my sauna, hop in the cold plunge, then I come back at 2 o'clock.
Bruce said 0 days to expiration volumes are huge. And I don't know if you can be able to answer to this, but I'll ask you it. Any idea who is doing the algorithms?
The stock market gods. No, they're the option dealers, guys who just trade options, who create. I have friends that trade options. They're at the Chicago Board of Exchange, or the dealers. And I don't know. I to be honest, I don't really know. There are programmers out there that make a lot of money, and there are option programmers, and they know how to, correlate stock movement to what they need to put in the premium, and then when to take the premium away, and when the odds are. All of a sudden it's funny. Like, I'll sometimes be selling premium, and I'll have a certain P&L in my options account. I'll go home at 11:30, like I said, come back at 2:30. Then all of a sudden I'm up a lot of money. There's like a time when they like to suck the premium out because they know the probability of the stock getting to whatever strike it is done, and you get to collect. It's they have their systems and they have their stats. It's probably very extensive stats, a lot more extensive than my trading.
Based on your positions disclosure, we can obviously see you play both equities and options in your strategy. And as you talked about with Tesla, you use you use them simultaneously to maximize your wins, et cetera, et cetera. Talk about how, though, you use equities and options together to trade.
Good question. A lot of people ask me that question because they look at the alpha team and they want to see, kind of in my brain what I'm thinking.
Right.
So sometimes I use options just when there's a binary event, earnings, or a big economic number, or an election, and I want to, I don't want to guess and have unlimited risk, so I use options. There are other times when the stock is kind of setting up, and I'm not really sure when it's going to go, so I buy options on it. Like, just say like this Unity, okay, it was trading between 36 and 39 for a little while. I didn't know when it was going to break above 39, so I'm like, you know what, just in case I miss it, let me buy some $40 calls, to have a position for that. And then all of a sudden, the stock technically wakes up, and I put it on with shares, and now I've had options and then shares, and people are like, oh wow, he must really like this because he was thinking about it triggering, and then it triggered. So now he's got both. So whenever I have options and then I have shares, that means the pattern's starting to go, and you better pay attention if you're on the alpha team to make money with that.
Our next question is not really a question, but a compliment for you, Scott. Baveen said he's followed you for a few years and met you in Atlanta when you had a presentation a few years ago. You are awesome, and I appreciate all the help you provide to the community. So just wanted to share that with you. Scott can't see the comments, but I read them to him. So
Brian, that's why I come back. I like the comments.
All right, so as I mentioned at the top of this, Scott is the leader of the Alpha Team virtual trading floor with T3 Live. So that is a live trading room with hundreds of other traders actively trading there in the room together with himself, but also with Dan Darrow and
Chillo,
yes, yeah, and Putty as well. So kind of 4 leaders in there helping kind of drive the conversation, but lots of other traders participating in that conversation as well, giving ideas.
They do.
Back and forth. It's a really great community. So Ryan asked if you could participate in one of the T3 VTFs regularly other than your own, so not Alpha Team, which would that be and why?
I'm not answering that question. I love everyone equally.
All right. He's a neutral guy here. But just for some information on Alpha Team, all T3 Trading Group traders, so those who trade with T3 Trading Group professionally, do get access to Alpha Team, and then also Derek Olden-Smith's Pro Desk virtual trading floor. So that's one of the kind of perks of trading with Trading Group, is you get to be part of that community alongside a lot of other active traders, professionals with T3 Trading Group, but also those who trade on their own in their own retail accounts. Scott, I know you have a hard out at 5 p.m., so everyone, just kind of your last minute warning here to get your questions in. We have about 6 minutes left, but I'll keep asking you questions, Scott. What are you looking at in the week, the next couple days? We have a holiday on Monday, stock market's not open, so we get a shortened week next week. What are you looking at over the next kind of 10-day picture moving forward?
I'm looking at like where the next big resistance level is in the SPYs and the Qs, just in case, this trend continues and all of a sudden, the Fed day's behind us and tomorrow's not a trap, because sometimes it's a trap, and I see where we can go, and I'm going to try and stay with what's working and try not to get over my skis if we get into an area where, it's going to be harder to get through. I'm going to watch the oscillator, that when it gets above 40, I'd be a little careful. It was above 40 a day or two ago. Now it's only at like 16, so it's got room. And just really watch the same things I always watch. How the stock's acting. Are they paying me to be in it? Can I use my tier system? Do they have nice patterns? Are they extended or are they tight? And see what's next. There are some things that have been acting better than others. Like a week ago, tech had a big down day, and some of those stocks have repaired and look like they might continue. Some still don't look good. Some are already going. So I'm doing all the things that I do every day. I'm just going to get up every day at 4:30, see what things are at, see what the futures are at, see how things are acting, and see how much risk I want to allocate on the type of day that it is. And I am leaving on Friday. I want to go to Florida for Father's Day. My parents can't travel right now, so I'm going there. So I'm also trying to figure out how I could play to the end of the week, where if I'm on a plane Friday afternoon, and things happen, I won't be able to, press the key. So I might do some things with options on things that I want to stay committed to, but some things that I might not want to.
Well, happy Father's Day early to you, Scott. I'll also be traveling this weekend with my dad for Father's Day. So, yeah, nice. I think it'll be great. Kind of our end of the question here. Just talk about the community of Alpha Team. Why is that community so important to you, and how has it changed your trading being the leader of that?
I just think that I'm lucky to have them. I've done a lot of different not even presentations, I've done trips. I've been to Ukraine 4 times, I've been to China, I've been to Uzbekistan. And every time I go to these places and I teach them my methodologies, my technicals, and my process, I'm also trading. So I always need to get the Alpha Team up, because when I'm out of my environment, away from my desk, that's my environment and that's my desk. I trust them for news. When things are happening, I can ask anyone at any time, is there news on this? Or what do you think about that? And I get a real answer where people are actually have my best interest at heart and everyone else's. So nobody's, trying to take your trade or have you do worse than them. Everyone's looking out for each other. So it's really how do you say meritocracy? Is that the right way to say it? So people like feel good about giving out good plays. It's like, like a little high five. Like I will say, like Pooty, 3 days ago, he's like, I'm buying Target. I haven't looked at Target, I don't know, in months. I'm like, that makes sense. Let me buy some options on Target. And then boom, today there was news about an activist, and Target went up, and I was in options, and then I also played the stock, and he brought that to my attention. Then you have guys that play the bios, that I when I have a question, I know who to ask. And then there are those who trade S&P futures. And then, so everyone has their little expertise, but we all pull it together. So this way, when one sector is in play, we know who to talk to. When the other sector, then we have our resident bears that I'm usually arguing with, that at times when they're growling loud and they're like, spread dog, then maybe they give me a little caution. So I feel like it's a community of people that want everyone to succeed. Plus, everyone likes to have a good time. We like the happy hour, and this is only water, but sometimes we have cervezas and tequila, and we try and share good times, and just a way to, go through the day, the week, the month, the year with people that, are like an extended family.
All right. So at the top, I asked you to give your trading this week and a grade, and you kind of went month wide. But let's talk real quick before we go about the best and worst trades you've had this week and why they were the best and the worst.
Okay, well, I'll say the worst trade I had last week, which wasn't really a bad trade, was like this week, I was long Tesla and I sold too many calls above, not thinking it was going to go higher. Then Tesla came out with news and it was up $14. So it could have been horrendous. So instead of it being horrendous, I just lost money but traded out of it really well. So I was happy. Sometimes you get a situation where you didn't think it was going to happen, so you have to make the right choice at the right time versus what you thought it would be. So I wound up losing, just say 10,000 plus in a day, but it could have been 50. So I was happy with it, but that was a bad day. So I said to myself, I'm not going to do it that way this time. Then my best trade really, or best situation, was this Unity software. The chart was building. I put on some options. I put on small stock, and then I had 2 triggers I wanted to buy through, and one triggered yesterday, one triggered today, and the stock was up 6%. Options went up 150%. Everyone had enough time on the alpha team to play it the way they wanted to play it. It took enough time to evolve, but not too long when we got tired of it. And I think I traded it pretty well, by not over trading it and by staying with some of it, and taking a decent amount or the meaty part of the trade out. So yeah, those were the 2 things. And then traded a lot of things. Traded IW1 pretty well, the options pretty well. That's why I got made the last month, because most things we traded pretty well. Yeah. Sometimes I don't. Sometimes I write better than I trade, and that I could say a bad word, pisses me off the most, is when I write better than I trade. But when you could write and trade and it equals out together, it kind of feels good. And this is one of those time periods.
Great. All right. Well, thank you so much for joining me for this week, Scott. And thank you to all of our attendees for your questions. We had a great conversation. Scott will be back in the future, but in the comments right now, I'm putting the link for our next event next week, next Wednesday. Patrick Ha, T3 Trading Group trader and moderator in the ProDesk virtual trading floor, will be joining me next week. So register for that now. Thank you, Scott.
Thanks for having me, Greta. Happy Father's Day to your dad, and I'll see you soon.
Happy Father's Day to you too.